What's going on, everyone? In this video, we're going to review and recap some trades that we took in my Discord community to end the week, along with some trades that I took. We're also going to go over how powerful the strategy is in specifically growing a small account, or even if you have a large account, this is very powerful to get some very good gains by just trading SPY and QQQ using supply and demand with market context. So in this video, you're going to be able to pick up a lot of my thought process, and in return, that's going to help better you for future trades. All I ask is if you could just take 2 seconds, drop a like on this video. I'd appreciate that. And if you want a very good trading resource, I'm going to link my Instagram in the description below. I post daily trading recaps along with very good trading tips and tricks on here. It's a very good resource, and you're definitely missing out if you're not following it. Without further ado, let's get right into the video. So let's first go over the pre-market plan before we actually get into how to grow the account, just to get more context and understand the picture a little better. So the key here was we had supply at 4175 and a quarter, as you can see from the top right here, and we were making a lower high on it, so bears had the advantage, sellers were in control, and we really didn't have any demand until 4142, which is this green box over here, and 4136. So what we were watching was a break below pre-market lows, and any bearish pressure should be good to play puts targeting those levels. Then we had demand below if we had an extreme extension, and we also were watching a break above 4175 for a potential rally into 4188. So now that we have a little more context and understand the picture of it, let's break down these trades, and then we'll go into how to grow an account. Whether you have a small account or whether you have a large account, I recommend trading SPY and QQQ options. I mean, this week, myself and members absolutely killed it solely trading these names because of liquidity issues, how liquid the contracts are, whether you trade the future or the option. I chart off of the S&P 500 future, and it's up to you whether you want to trade the future outright or you could trade its underlying options. However, here is the plan. We were bearish overnight. We missed supply by a couple of ticks. We put in a pre-market low. And now before the market opened, this is what I was watching. So we were watching the 4163 area. Above it would have been inside balance. It would have been consolidation. Below it could have extended us until the 4142 demand zone. So essentially, once we got below support at 4153, we were looking to play puts targeting the 4142 demand. And then once price discovers that point, we can look to potentially see the perspective of the type of trade if we're looking to go long there. So then the market opened. Let's just fast forward to see what this looks like. Then the market opened, and this is where perspective comes into play. So we sold off, right? Put yourself in a perspective of other retail traders who are shorting the market below VWAP, a quick 10-point sell-off in the first 5 minutes. Everybody's super bearish. So now you have a bunch of shorts that are in the market right here. What's the market going to do? It's going to rally. And if you were short here, most likely you're going to stop out. We acted as a wall around the 4167 zone, and everybody that now were long here or stopping out is trapped here as well. So I always like to let the market develop in the first 5 or 10 minutes. This is when you're going to have the most volatility. This is when you're going to have the most whipsaw action. So no trades here, and it's very important for you to be patient, especially trading SPY, QQQ, even other equities. The market's open for 6.5 hours. You get paid for your opportunity. You don't get paid for your time. So you have to wait for your setups to trigger. I stress this with members a lot. I go over it in the course. It's my primary psychological tip is you have to wait for the edge to be present, and then you take a trade. So then the market started selling off, and this is where we came pre-market below pre-market lows. I personally did not take this trade. I know members did take the trade. However, this would be the first valid point to play puts right here. I was watching QQQ at this point, and I completely lost focus of the context of this. However, members did take this, and we did sell off. So this was something similar to what we saw earlier in the week, where essentially there was no bids into the market, kind of just free falled below it. So we got a quick little 12-point move into this demand zone, and then this is where the first trade came into fruition for myself. So we sold off into this demand, and we found some support at 4142. So if you were short, this would be a good area to cover. When I'm short, I don't like flipping from short to long, then long to short. I like getting out, reassessing the market, and generating more information that's going to help me with its context clues. So the market started selling off and we came into this demand imbalance where we started stalling out, moving sideways, and sellers really lost steam. They lost a little control. As soon as I saw this break above 4145, 4146-ish, that's when the trade was on. We eventually rallied, and this is something I stress to members also a lot, is the further you get away from your area that you would stop out, the larger your risk to reward ratio is. Therefore, you can't afford to take losses. So if you ever are hesitant to put a trade on, essentially you're scared to pull the trigger and you're skewing your risk to reward. So eventually we came up, and if you're longing over here, this is kind of the situation I was in. If you didn't get long earlier over when we bounced off a demand about 4 points lower, now we're buying up here. Our risk is about 7-8 points, whereas our risk over here was only about 3 or 4 points. So then the market started rallying and came right into VWAP, where I told members this would be a good area to scale out if you were in long. Try to pull this up here. I usually like using VWAP just to see the gauge of participation, to understand where, if sellers are stepping in here, it might act like a little bit of a ceiling where we might have a hard time breaking. However, it could be also trap, which is what we saw here. So if you're long over here, this is a good place for you to scale out from the first trade. And now this rally up here kind of validated this sell-off in the morning, kind of made this a makeshift supply zone if we were to draw it like that, and it was a pink box. So not only do we have VWAP, but we also had this supply zone that validated a good area for you to scale out of your calls. Now this rally over here also told me we have strong buyers into the market, so that's why I was not looking to short at VWAP. We also created demand somewhat like this in this area. We could extend this forward. And what happens? Price is stalling at VWAP for about 30 minutes or so. We eventually sell off, and guess what we do? We come back right back into this demand zone. This is where the third valid trade was put on. We come into this demand at 4148 and we start rallying. Now we're above VWAP. Now we're showing no signs of selling pressure inside of supply. We have the nearest overhead supply at 4175 from the pre-market plan. We rally into that zone, and that was the area to take profit. Now we have 2 points where buyers are present in the market. The context of this is very strong buying. Down here around 4160, 4155. Then the market double topped inside of supply, pulled back. This is where major FOMO comes into play. We were choppy for about 2-ish, 3-ish hours. And if you missed the first 3 trades earlier in the morning, your emotions are going to be through the roof over here. You're going to be wanting to get into a trade. And this is where a majority of traders take the losses, because they're trading in a market or an area that they should not be. Eventually, we did bounce off of VWAP, acted like supply was not there, and closed the day very, very strong. So it's very important for you to do that type of analysis as the market's developing and as it's giving you its context clues. I try to update members as best as I can throughout the day in intraday commentary tab. You have to understand the participation between buyers and sellers, and then you could take trades based off of price and volume using these imbalances. However, how to grow an account, whether you have a large or small account, we were focusing on SPY and QQQ this week. If you've seen the recap I did Monday and Tuesday, we had some really good trades. And Wednesday, Thursday, Friday, that's what this video is on, really good trades. So this is not really to boast about what you could, hypothetically speaking, can make. These are actual trades that we put on based on my entry signals, based on my confirmation signals, based on my exit target points that I go over in the course. So that first play from pre-market lows, if you were to use that context from the plan, you could have got SPY 414 puts if you trade options at $1.40, and you would have sold at a high of $2.06 for a 47% return. So essentially what I did here was I lined up the puts on the left and my crosshairs are synced to the S&P 500 chart, the future on the right. So like I said, if we were to trade the puts at below pre-market lows, you could have got in around $1.40. And if you were to top ticket, which in this case, let's play it a little conservative. Let's just say you sold at the first touch of demand around $2. These went up a 43%. So if you had a trade you put on with, let's just say $1,400. Let's say you have a $2,000 account. You take this trade with $1,400. That $1,400 will now turn into $2,000, and you would have made a $600 profit. Again, this is not to boast, talk about hindsight, hypothetical speaking here. These are actual returns and potential trades you can take if you pull the trigger, you have conviction in your setups, and you trust the plan and only follow your edge. Now we're going to put in the SPY 415 calls and act like we come down to demand and long it down there when we had the proper entry signal. So I had these at $1.37 yesterday down here once we came above 4144. So let's just say, conservative speaking, we sell with the first touch of VWAP, and this was at the same time we came at the supply. These contracts went up 30%. If you take this trade with $1,000, your 1,000 now just turns into 1,300 in approximately 15 minutes. So because SPY has 3 expirations a week, Monday, Wednesday, Friday, and if you time it right and you respect your stop loss, you respect your risk, there's some trades like this one right here where I got in $1.37 where I was risking 10 cents to potentially make 50, 60 cents. So on high risk to rewards, you can afford to lose more when you are rewarded much higher than your risk. Win percentage does not matter. Now, let's just hypothetically speak here. Let's just say we longed at 137 and we stuck to the plan and held to the supply. These went up 150%. So that same $1,000 now would be approximately, what's the math on that? That would have turned into $2,500. You would have made $1,500 profit on it. 1,000 turned into 2,500. But conservatively speaking, let's just say we got long at $1.80. These went up 87%, 90%-ish. So these move very fast. If you have a small account, I would recommend trading them. If you have a large account, due to the liquidity, you can easily get 50 to 100 contracts without moving the market. Like I said earlier, the S&P is one of the most liquid markets in the world. If you've made it this far in the video, you're loyal, drop a thumbs up. I want to see if we could get 632 likes. I like to see who watches my videos to the end. But now let's go over the pre-market plan on the S&P today, on Friday. We had non-farm payroll news coming out. We were inside of demand where we sold off into. As you know, price precedes news. So we had all-time highs we were trading at. We also had supply, which was technically invalid, but I wanted to keep it on my charts. And then we had demand at 4197.5 to pre-market lows that we wanted to hold and buyers to respond again. So now that we have a little bit of a picture with that, let's make the S&P bigger here. So here the market opened up. We came out with non-farm payroll news. The market was inside of supply. Guess what happens? We drop into demand down here. Look at the beautiful volume. We pick up more orders. Then we come right back to the range we were at. Consolidating inside of supply. We eventually broke above it. So now this technically becomes invalid. However, I wanted to keep it on my chart just to see the context of if buyers were buying inside of supply today. So we sold off into the morning, and then this would have been your valid area to take the market long. I personally, like I said earlier, avoid the first 5 minutes unless there's really strong, convincing context. For me today, this drop inside of demand was valid. However, based on how I prefer to trade off of my risk tolerance, I felt at one point, even though we got proper confirmation down here, this was a little bit of a higher risk type of trade because it happened in the first 2 minutes of the market open, 3 minutes of the market open, and then we rallied. However, if we pull up my E-Trade account, and over here we have the SPY 422 calls. If you were to long at demand this morning, now you're playing far out of the money. At one point, these were at the money when I traded them. These were around 11 cents and went to a high of around $1.26. So that's a little over 1,000% return. Let's just say, hypothetically speaking, a YOLO lotto, where you essentially are risking the full investment. You sell at the low, you buy at the low and sell at the high. These went up 1,000%. $100 investment. This is not something that's going to happen. I'm just showing you the power of options. $100 investment would have turned into a little over $1,200. So that's selling at low to high. However, I did not take this trade long until around, what was my timestamp? 10 o'clock even, actually. I was in the intraday commentary tab speaking exactly what I saw. So we formed somewhat of an area where strong aggressive buyers were priced into the market around 4211, 4205. I wanted it to hold, and I may look to take long if buyers respond there. So what I saw was the market came past all-time high. Now you have a bunch of longs priced into the market. This supply becomes invalidated. Now we're watching for a pullback in this area right here. And at the time it was down to VWAP. We wanted this to hold. We pulled back, and as soon as we dipped into this demand and immediately bid it higher, I'll show you what the candle looked like. Just like this, I took the market long. I played SPY. Pull this back up here. I played the SPY 422 calls at 10 o'clock for 50 cents was my fill price. So this costed me $50 per contract. If you trade 50 contracts, this costs you $2,500. You trade 100 contracts, this costs you $5,000. Keep that in mind, right? Now the market's up. We're at all-time highs. I have nothing to gauge where I'm going to take profits. So what I have to do is either use my take profit strategy that I talk about in the course, or look at participation, watch the time and sales, watch the level 2, and that's exactly what I did. So at this time, I saw a very large passive seller sitting on the offer at 4220, and every time we came into that level, he would still be there, and in fact, it would just be like a brick wall. So what we want to do here is see how price responds. If we sell off, we're going to look to take full profit off the table. However, if we get above, we are going to sell into strength to get the best bang out of our buck. Then at 10:08, we saw confirmation. Look at all those prints at 4220. I mean, 500 lots, 200 lots. These are all 40 and above. So very serious size. Took out that passive seller. I'm not too sure the logic behind it. However, this was our confirmation that the market was going to continue when you sell too early on your SPY calls. So what I saw here was at 10:09, I scaled out of my calls. This was as soon as we got that push up above that 4220 area. I gave it a little more time because there was really no selling pressure. However, I was using my take profit area, and I got out at 88 cents. So that's about a 38-cent return on a 50-cent investment. That was my first scale. That was 75% of my size was at 88 cents. Then the market continues to rally. Again, we have nothing to gauge any type of selling pressure other than a couple of candles. And as soon as we got that quick push up into 4288, I gave this about a 16-point jump from where my entry was. I was happy with my profits, and I sold full position at $1.02. So if you were to, let's just say, not scale out and you held from 50 to $1.02, $5,000 would have turned into 5,000 profit, and now your $5,000 would be 10 grand, or 2,500 bucks would have made you, close to 2,500 bucks as well. It's a 100% return. These things move fast. Very strong move. We caught it at that demand zone. You have to ride the wave, not let your emotions get involved. This is not to boast about how well I performed today. This is just showing you the type of analysis that needs to be done and the power of same day SPY, QQQ options, and how beautifully they move because of their liquidity backing it. So these eventually, went to $1.24. I missed out on about 20 cents. Not a big deal. Had a great entry, stuck to my plan, and that's really all that it boils down to at the end of the day. So I hope you all enjoyed this video. I hope you learned something. The main points I want you to take out of it is not to trade based off of your emotions, but trade based off of what the market's telling you. Respect your risk, leave your emotions out of it. And if you want to use my advice, try trading SPY and QQQ. Less distractions, they're very liquid, and they work very well with supply and demand. These were trades throughout the week, 94%, 92%, 78%, 53%. So very good trades. His one loss was only a 44% loss compared to his other wins. So it's a very simple strategy. There's no reason to overcomplicate it. Understand market context. And besides that, I'm going to end it here. Be sure to follow me on Instagram. Drop a like on this video. If you have any questions, comment them down below. I'll get to all of them. And if you want to learn more and join the chat room and the course, be sure to check out the website in the description below. Peace out.